Hello, welcome back, 99 family. I'd like to thank you all for coming back and supporting and being a part of the family. If you're new to this channel, on this channel we talk about professional development, personal finance, and business finance. If any of those topics interest you, please don't forget to subscribe and hit the notification bell. Click all so that you get all of our videos. Also, please don't forget to like this video, give it a thumbs up, and leave us any comments with any questions you may have or future videos that you may be interested in viewing. Today, I'm kind of starting a new segment, and this will be my financial term dictionary. And I want you guys to let me know how you like it. I'm going to start going over various financial terms and abbreviations that you may see used in the credit industry or in finance overall, and what they mean, and kind of a breakdown of them, and then give a little bit more of my insight throughout these segments. So today we're starting off with CLI. This is an abbreviation for credit limit increase. A credit limit increase is an increase in the available credit limit on a primary trade line. I know for those of us that are in this industry, you could argue that credit limit increases also apply to authorized user trade lines. However, my argument is, as an authorized user, you cannot be the one to apply for the increase, being that you are not the primary person on the account. So this is really going to be something that will only apply to someone with a primary account, and generally speaking with an unsecured card. As with secured cards, you generally cannot get a credit limit increase. So the ways that you can get a credit limit increase, or when this can occur: your bank may do automatic increases. Some banks may do a monthly review of your account. Some banks it may be quarterly. Some banks it may be biannually. Some banks it may be annually. And they'll review your account and see if you're eligible for an increase. And based upon your usage of the account, how you manage the account, your bank may or may not actually approve you for a credit limit increase without you even taking the extra time out to apply for it, without you actually doing anything. So again, that is the automatic route, where the bank can automatically just give you an increase. Then you have the manual route, which is where you can request an increase depending on your bank. Certain banks, such as Discover, offer you to be able to manually request for a credit limit increase every 30 days. Certain banks are more stringent on their policies. What I recommend personally is, because for a credit limit increase, depending on your bank, it could be a soft pull or a hard pull. If it's a hard pull, I recommend waiting for your bank to do an automatic increase, or just completely applying for a totally new credit product, rather than utilizing one of your hard pulls to increase a trade line that you already have. If it's a soft pull, I would request a new credit limit increase every 90 to 180 days. Generally speaking, if you're doing this quarterly or biannually, the banks typically, if you're managing your cards correctly, will go ahead and give you that increase. So that's why I recommend not applying for one every month, even though your bank may allow it, because it can make you look like a risk factor to that bank. And you kind of want to stagger when you do it. You don't want it to be every 90 days exactly that you're doing it. Sometimes you may want it to be 120, 180, kind of bounce it around so that the bank's system doesn't automatically flag you that you apply for those increases regularly on that schedule. You kind of want to stagger that schedule. Another thing, if you're going to request a credit limit increase, you want to make sure that you're doing this at least 45 days before applying for new credit, because you want your new credit limit to be reporting on your credit report when you go to apply for new cards, so that banks can see that new credit limit on your report. If I get a credit limit increase on the 10th and my statement date is the 20th, and I apply for a card on the 19th, that credit limit is not going to show. So I say give it time to show on your report. Depending on your bank, it may take longer for your new limit to report. So that's why I say to stay in the safe zone 30 to 45 days before you're applying for new credit. At least I would make sure that you're doing your credit limit increases. So now breaking it down into your pros and your cons. Your pros are, this is a big one, lowering your utilization. Your utilization is over 200 points of your credit score. It's important to keep a low utilization, and the higher your limits, the lower your utilization. This allows you to have access to higher funds or more funds. You're able to use more of your credit cards. You have the ability to pull more from your revolving lines of credit. Your cons that I see for credit limit increases are that you have those possible hard pulls, and also that you could possibly be denied for that increase. With that all being said, I'd like to thank you all for watching. Please let me know if this video helped you. If there's any terms that you want me to go over specifically, let me know. And please make sure that you guys are all liking the videos, commenting, especially if you have questions. Please do not be shy with asking questions, and sharing this information out with others. And I want to thank you all for watching, and I'll see you all in the next video.